Oh, hello to everybody this Friday morning. My name is Dotun, Ayodele-Bamisaiye of Dexteritas Professional Corporation. And as usual, I'm excited to be here. This is another opportunity to make a difference, another opportunity to share some information and be of valuable support to the community. It's been an incredible week for me. Inventures. Alberta Innovates. Thank you for Inventures. I know day 3 is ongoing and I can't make it there, but man, the first 2 days were amazing. And the keynote was the keynote. Gary Vaynerchuk had it going. The man pulled no punches. He gave it to us exactly the way he saw it. Basic fundamentals: be human, do business with empathy. That was the first thing that he talked about. Then, of course, I remember him saying something about riding the AI wave. The AI wave is here. It's either going to wash you away or it's going to make a pathway for you if you ride it. That was the second thing I heard him point out. Another thing I heard him very, very loudly and clearly say was the fact that as business owners and people in enterprise, excuses are not an option. If it's not working, find a way to make it work or quit. Don't complain. Make a decision. Either you're going to go through the wall or you're going to stop where you are. But complaining, not an option anymore. So that was Inventures for me. I'll probably write something more about it later today, but I just wanted to share that quickly before I go into my conversation for today or my talk for today. Yeah, so that was a highlight of my week. Now, today I want to talk about, I'm still talking taxes, don't worry. I'm still going to talk about taxes, even though officially tax season is over. The reason I'm going to keep talking about taxes is taxes are your biggest single expense. You're going to pay more in taxes than anything else, you're going to spend more in taxes than on anything else in your lifetime. You spend more in taxes than you will pay on your house, on your mortgage. Think about that. Because as a taxpayer, you are parting between 20 and 40% of what you earn every year. So when you think about it that way, you start to revisit the conversation, i.e., between 20 to 40 cents on every dollar that you earn. That's what you pay in taxes. That's why you need to have a plan. And that's why my conversation today is going to focus on exactly that. What is the cost of poor or no tax planning to you? Yeah, that's what I'm talking about today. The cost of poor tax planning or no tax planning, like most people do, right? So most people think that tax planning is for the rich, that if you don't make a lot of money, like $500,000 per annum, that you should not plan your taxes. Hello. If you are low income, you should have a plan for your taxes, because in Canada, if you don't file your taxes, the benefits stop coming. And as a modest low income individual, government benefits are a huge part of your income plan. So you need to make sure that you are in the right and that money comes in when it should. So really, everybody should have a plan for their tax returns. I'll say that again. Everybody should have a plan for their tax returns. Everybody should have a clear tax plan that they're running with. That's why I'm having this session today. So what are the costs of not having a plan? Number one, you miss deductions. You bought a house, you didn't claim the home buyer's amount, or you made an RSP withdrawal and you just went and you took $15,000 at once. Boom. Those kind of things happen because you don't know better. If you knew better, you would do better. And the way to know better is to have a plan. Ask the questions so that you can do things right. Basically, that kind of situation costs you hundreds to thousands of dollars in taxes that you don't have any business paying. And that's my job here. My job is to draw attention to the taxes that you are paying that you should not be paying, right? Another way that, So the first one we talked about was missing credits or deductions. And that will happen if you start to think about your taxes maybe sometime in January or February before you call your accountant and go book that appointment. But if you knew from the beginning of the year that, okay, these are the things that are going to happen in my life, and I understand the tax implications, the likelihood that you'll be missing deductions and benefits or credits is slim to none. So what's happening in your life that has a tax implication? Do you know the tax implication? And are you taking advantage of it? Because it's happening anyways, right? Bimpe Coyote, thanks for joining us. Mr. Fashino, I appreciate you joining us here as well. I see you on Instagram. Thank you very much. I appreciate this. Now, the other thing I want to draw attention to, and this is for all my business owner side gigs types, the wrong structure for your business. It's such a huge cost. I've seen people come to me, oh, I have 2 T4 slips. And suddenly they're looking at 150, 180, $210,000 in income. And taxes have been deducted like their total income was under $100,000. Suddenly they are stuck with a massive tax bill. This is what I've seen, right? So why would you put yourself in that position if it is avoidable, if there are things that you can do? Most likely it's because you don't know, right? I understand that. And that's why I'm drawing attention to it today. If you're in business and you have or enterprise, or you have something by the side of your desk that you're doing that's outside of your T4 slip and it's bringing in money, it makes sense for you to say, okay, how am I paying taxes on this? Because that ensures that you are optimizing your tax position and you are keeping that bill reasonable, somewhere between 20 and 40% and no more, right? If you can drive it lower than 20, hey, that would be excellent. But that rarely works. But if you're paying more than 40% as an effect, if you're paying 40% as an effective tax rate, you're paying a lot in taxes and you should be thinking about it, right? So if that's your situation, you have a business that's making money, you have a good job, you have a lot of income, then you need to be thinking about your taxes, definitely, most certainly. Because if you're not thinking about it, I can tell you for free that you're already paying too much. End of story. Another thing I think about, I want to draw your attention to is the need to stop somewhere in that Q3, Q4 range, when fall is about to wrap up before the snow starts to come down later in the year. Just look at your entire situation. Even if you had a plan, look at your entire situation and say, hey, okay, what exactly did I start the year with? What has happened so far? And what do I need to move around to make sure I still get the results that I want? There's nothing, it's perfectly normal for things to go slightly off the rails. It falls apart when you do not course correct. And that's what your Q3, Q4 review does for you. You look at the entirety of your situation and say, hey, I need to increase my RRSP contribution, or no, I have over contributed. I need to pull back on my RRSP contributions, or something came up. I had to spend a lot of money on medical expenses. I need to get those receipts together because I understand there's a tax implication. Or maybe you plan to go to school and then your employer somehow along the line decided to pay for it. That means that T2202 you were expecting to make a claim for is no longer valid, because guess what? That money didn't come out of your pocket. Your employer bore the cost. So being able to revisit the entirety of your situation and course correct closer to the end of the year is a solid opportunity that many of us miss. And I'm saying, hey, plan for it. Totally plan for it. Because planning for it means that you're planning to keep your tax bill reasonable. And when we do that, the benefits are one. Your cash flow is impacted because you're able to identify, hey, do I need to put more money away in an RRSP, or do I need to pull back? Are there things I have spent money on that has a tax benefit for me that I can, gather the documentation and prepare it in a way that ensures that sometime in February March, April, when I'm filing my tax returns, it guarantees an improved refund. Those are the things that I want us to talk about, and those are the things that I'm bringing to our attention today. A few scenarios that I've seen that are interesting, multiple income streams that are not efficiently structured for tax purposes, totally missed benefits. So I had somebody who called me recently to say, we've done the tax returns the year before, we're doing the current year tax returns, when suddenly it became apparent that, they had purchased their first house the previous year. And I was like, this was in our onboarding checklist, but somehow the information did not translate. So those are the things that you should not be missing. These are things that you should be taking advantage of. So the basic fundamentals, I will reiterate them again. Every year on Know Your RRSP contribution room, as much as possible, contribute as much as you can into your RRSPs. It is a direct money back in your pocket as far as taxes are concerned. That's number one. Number two, do some good in the community. Put some money into charity. Charitable donations, you will get a good 30% of whatever you put into charity back as a reduction in your tax bill. So that's always a great place to be. That's something that you definitely should do. Now, if you earn income from multiple streams, then it makes sense to say, hey, where are the opportunities to maximize my to optimize my tax refund, right? Or to optimize my tax bill. Where do they exist and what can I do about that? So this awareness is key, and that's why I'm talking about it again today. There are opportunities and there is time. We are between now and December to address certain things, and then up to February to address some others. But while there is time, let's take action. Let's be aware and let's take action, because that's beneficial. So what is my call to action to you today? What exactly am I trying to get you to do? One, I'm trying to draw attention to the fact that, hey, it's still May. 2025 taxes are important. That's number one. Number two, there's a lot that you can do. So start to look at your situation and look at the things that happened in 2023 and 2024 from a tax perspective that you didn't like, that you'd like to see differently, and start to do things about that, right? And if you look at your situation and say, you know what, I do not know enough to be able to handle this. I am not educated enough. I am not informed enough. And you think you need the help of a professional like myself, then head on to taxplanning.dexteritas.ca and book a tax planning session, and let's talk about your situation, right? Let's do a decent dive into your situation. And if you happen to know that what you need is a corporate restructuring, you will need to say, okay, you know what, this is how I earn money, and this I know categorically that this is not efficient. Or no, I'd like you to take a look at my situation and let's see if there's a way that we can optimize the structure for tax benefit. Then let's have that conversation. I'm happy to support you and then put you in a better place, help you get to a place where you are more confident and are happier with the tax outcomes that you are getting. So that's pretty much all I got on this Friday morning. It's Friday. It's the 23rd of May, 2025. I'm here in Calgary at our offices at Dexteritas. It's been an amazing week. Inventures is wrapping up. To all the folks out there, I say have fun, enjoy yourselves thoroughly, because there's lots of work to do this summer. There's lots of building to do, and there's lots of opportunity to make a change in this day and age. So let's go be awesome. Let's have an excellent day and enjoy the weekend as it comes. From me, it's bye for now.